I just want to take a look at one of the charts we have on the Bloomberg, and there's no shortage of them illustrating this sort of thing. Chinese stocks now back to where they were before Beijing intervened in mid-March. Where do you see the future for stocks here? Do you see them heading lower, or do you see perhaps finally the sort of intervention coming from policymakers that the market's hoping for?
This is the challenge when you verbally intervene. There was a lot of rhetoric there and a lot of promises, so to speak, made, but very, very little substance occurred over the following month, and we've seen those stocks running out of steam. Look, as you alluded to before, there are widening lockdowns across China. They're tightening up in Shanghai again. This is going to cause logistical problems that will affect not just China, but also the rest of the world. And we're seeing no sign of change about the COVID zero policy from the government, and very little in terms of actual material stimulus measures if we judge their activity from previous years and decades. You know, they've declined to cut the 1 year MTF or the 1 or 5 year LPRs, for example, and they're still running a neutral liquidity policy by the repos. That all points, I believe, to lower China stocks, and we're going to see a weaker Yuan going forward.
Well, we've got about 500 Chinese companies reporting earnings this week against this backdrop of the lockdowns. I have another chart here illustrating what we might expect. The outlook for consumer discretionary, perhaps not surprisingly, particularly bleak. What are you anticipating this earnings season in China?
Yeah, I think it's going to be a tough one. I think the export sector or export-facing companies will hold up. Tech is an ongoing issue, isn't it, with the regulatory risks surrounding that. We also still have the slow-moving train wreck of the private sector property developers as well, and I can't see any material progress on deleveraging there. Consumer sentiment must, by default, in that background, take a hit. So I would say there's substantial downside to the outlook for sentiment that will potentially show up in the PMIs that we see from China later this week and in the weekend, but also because of these restrictions.
Jeff, are you at all factoring in the market reaction from the French election, especially given that it gives a little bit more certainty to the European market reaction as well?
Well, the euro's only up about, I think it was 20 basis points or 20 pips when I last saw it. President Macron's lead actually widened towards the end of last week, and we actually saw option volatilities with the expiry of today come back to normal levels. So the market had already started pricing in a Macron victory, and that's how it's played out. So I'm anticipating this to be a very minimal impact on markets, bullishly anyway. And we saw that the euro itself closed below 108 on Friday, huge negative technical signal. And that trend line that it broke at 108, that goes all the way back to 1985. So I think there's much more challenging times ahead for the euro and Europe.
Are you bracing for any changes coming from the BoJ on Thursday? I mean, we continue to see the yen weakness. Will Governor Haruhiko Kuroda have to act, and what would that mean for the broader markets?
I think it'll be a huge surprise, and the main reason I say that is because they were intervening so aggressively last week to cap 10-year JGB yields at 0.25%, which is the upper side of their targeted band for JGB yields. I can't imagine that they would have done that so aggressively if they were intending to perhaps change that policy somewhat or tweak it in this meeting ahead. That would have been a nice way of hinting to the market that some changes could be on the way. So I'm expecting them to hold fast with their expansionary monetary policy, and that should lead to yet another bout of weakness in the Japanese yen as yields around the world continue climbing higher, notably in the United States.